construction zone, but I wanted to do a video for you guys. Major life changes going on for me right now. But I'm gonna get back to my old camera setup and get everything going well. But I don't want the party to stop. So let's get rolling. Inflation. Inflation is when they print money. Don't let them tell you anything different. That's what it really means. But the product of inflation is rising prices. Inflation is caused by when they print more money. Rising prices is the end result. They'll tell you inflation is rising prices, but that's putting the cart before the horse. You get the rising prices because they print a whole bunch of money. So, what does that really mean? You need to protect yourself in this environment. In this environment, inflation and everything, you need to be prepared. And I'm going to give you guys a couple of ideas that you can kick around for your preparedness. Give you guys 5 things, and if you like them, please comment below. If you don't like them, please comment below. Like, subscribe, and then there's going to be a write-up for this in the link below. So if you don't miss anything or you want to get a little bit more info, there's going to be a write-up on my blog on the link below. So what's going to be number one? Number one, I'll probably say is gold. Gold, you can throw other precious metals in here, but basically gold is an object the same way like an egg is an object. You go to the store, eggs are more expensive because of inflation. Gold, in theory, is going to be more expensive because of inflation. So how do you play that? You can get some physical gold. That's what I like. I like physical gold. There's a thing going around like, I forget the phrase, but it's like if you don't hold it, you don't own it. That's what some people feel. I don't feel like that. I feel like that's kind of not sophisticated way to look at it. But they also have gold ETFs. So you like GLD, that's something you can buy on Robinhood or another stock market app, and you can be invested in gold, or you can get like gold coins from a place like SD Bullion. If you want to get real fancy, it's not reportable to the IRS, so you can store it overseas. You can store it like in the Cayman Islands. They got other types of vault storage. If you're gonna do vault storage, it's probably the best to store it overseas for real. Number two is going to be tips. Tips are a special bond that you can get from the I in tips is for inflation. That's adjusted for inflation. Upside is that it's adjusted for inflation. Downside is it's what the government says is inflation, because it's basically treasury bonds, but it's what the government says. So why is that bad? If it's 4% inflation actually, but it's only 2% inflation according to the government, you only get 2%. And it's bonds. Bonds aren't the best investment right now, but that's something you want to kick around. The next one, number 3, is real estate. I understand that maybe picking up a house, is it the best thing for most people right now, money-wise, or can't really fade it right now? So another way you could play it, I like rental houses. I don't really do the REIT thing, but you can buy into what is known as a real estate investment trust. You can get that on the stock market, so you can invest in real estate, understanding that real estate is a good similar to gold. So when the prices of everything goes up, houses are included in that everything. You can ride the wave that way, but you can do rental real estate, and keep in mind that the house that you live in is not an asset. So number 4 is going to be oil. Oil and other commodities, but I want to say oil because oil is one most people are, what's the right word? Familiar with it. So that's one most people are familiar with, and it's easier to play. If you want to do like the easiest way would be to invest in a company like Exxon. If you guys are familiar with the channel, I'll put the link to this video below. I did a video. We're starting a dividend portfolio. Put $500 into Exxon at an average price of $37. Exxon had a 52-week high on Friday, and it's like $60 because on this channel we already saw that the market was right for an inflation play, so we made one. So that's probably the easiest way. Buy like Exxon, Royal Dutch Shell, or something like that. One of those companies is going to be easiest. If you're a little bit more advanced, you can play around with the WTI and get into some trading and some things like that if you want to get more advanced. But for most people, you want to hedge your bets. Go on to your Robinhood, whatever app you use, buy a couple shares of Exxon, Royal Dutch Shell. Exxon just hit a 52-week high, so maybe today, because Monday I think the stock market's going to go up. So maybe it might not be the best time, but gas prices are going to go up. And why they're going to go up is it's a supply and demand thing. People think that they only look at the demand side because most people are consumers, but the suppliers basically cut the supply, so the price has to go up. Boom. And this is the last one. The drum roll kind of made sense. The last one is going to be a more advanced version of the first one. So the first one is gold, and this is for my more sophisticated people. Gold comes out of the ground, and that's called mining. So gold, silver, copper, all those minerals, when they come out, uranium, all that stuff, when it comes out of the ground, you got to mine it. And mining is the way to hedge the gold plague. Like I said, gold doesn't make you any money. Warren Buffett, people might have heard that he invested in gold. He didn't really invest in gold. Really, he invested in a gold mining company. So the advantage of a gold mining company is a company, it can pay you a dividend, but its underlying asset is the gold, or its underlying asset. People don't really directly mine for silver, but there is silver miners. That's something separate. But like, you invest in uranium mining, the uranium is the asset. So they hold uranium on their books, and they make money off of selling it. And there's like a difference between the price that they buy it for and get it out of the ground, and the price that they sell it to people for them to later refine and do more things with it. So if you like the gold and silver play and you want to hedge it, and you want to make some money off of it. So in theory, these are just made up numbers. If gold goes up 10%, gold mining stocks will go up 10, 12% more. It's more than that, but like, you can get, like, if gold goes up 10%, gold mining stocks might go up 20%. So it's like a lever play. So get comfortable with gold. That's what I would do. Get comfortable with gold, then mess with the gold miners. If you want to be aggressive, you think gold and all this inflation is going to happen, mess with the miners first. But so if you want to get physical gold, do that. And if you don't want to do the ETF gold, you can do a gold mining company like Barrick's Gold. So that's what Warren Buffett did. So those are some things you want to consider for inflation. Once I get this set up how I want it, you guys will see some videos with my good camera, and hopefully everyone's still staying safe and all that stuff. So this is Nick signing out. Remember, like, comment, subscribe. And if you want more information on anything we talked about today, you're seeing a little graphic about everything we talked about, and there's going to be a blog article you can read everything in the link below. So thanks for watching.